Hey everybody, it's Reno Viola. Yes, Mortgage Alliance Ontario approval team. I am Reno Viola. I'm the mortgage guy. So when you hear the word mortgage guy, it's me. In the dictionary, they've taken away all the meanings and put my face there. I hope. Of course, Sandy and I, my co-host, the co-owner of the team, and the team leader, are going to try and give you as much information as you need to know in order to get your mortgage approved. We're going to start with basics. This will be a very easy to understand kind of a show, and it's going to be on a weekly basis, and it's going to be a couple of different topics every week. So we welcome your suggestions. We actually want your input as to what we should be talking about. But for this week, we've got two great topics. Number one is down payment, and number two, of course, is how much can I afford? So I'd like to introduce my co-host today. This is Sandra Brown.
So yes, thank you, Reno, for letting me talk. I'm Sandra Brown. I'm the mortgage agent with Mortgage Alliance, and we're here to talk about down payments and what does it take to get a down payment and different options available to you. Let's make this simple and let's have some fun. So Reno, can I borrow the down payment?
Yes, of course you can borrow the down payment, but it's not that simple. We do get a lot. That's probably my number one question is, can I borrow the down payment? How can I don't have a down payment. I've got great credit. I've got a great job, but I've got no down payment. Can I borrow it? Well, I think before we answer that question, and by the way, the answer is yes, but before we fully answer that question, we should be talking about down payments in general. So what is a down payment? Well, a lot of people feel that a down payment's a fee, a penalty of some kind. It's not. It's your investment in the property. I mean, you get a lot of lenders who will give you up to 95% of the value of the house, whatever you paid for it, but they want a little bit of your money in there, and that generally is 5%.
It's more than just, they want more than just if you don't have your own investment in the property, they want more than just you having a good job. They want to make sure you have good credit to go with that. Because you have to have more in the game. And because of the fact that you are borrowing the down payment, you need stronger credit, you need a stronger job. It can't be just somebody just starting a job expecting to borrow a down payment. It takes time. And Reno and I are more than happy to advise you on which way to go and whether or not you're eligible for that program. And then there is other programs out there as well, where there is grant programs from townships that are subject to whether or not the funds have been used up or the time of year and stuff like that. There's also gifted down payments. So those are all different types of down payment. And that's the biggest issue most people have is they say, I just can't get the down payment. So in order to do the borrowed side of it, you got to think of the fact that your credit has to be good, because these lenders are taking a risk on you because you have nothing involved in the borrowing.
Okay, but let's go back to basics. Remember, we said this show is all going to be all about basics. So what is a down payment? Basically, the down payment is your skin in the game. If you don't have any skin in the game, they're not going to let you play. And the point is, they need security. They need for you to have a good job, like Sandra said. They need to have you have great credit in order to be able to take the risk of loaning you 95% of whatever it is. And so it's your skin in the game. But then we always get into the age-old discussion. It's not an argument, it's a discussion of what's my minimum down payment? Well, in Canada, the minimum down payment is 5%. So if you're going to buy a house that's $100,000, although God forbid, I don't know where you'd find one of those, but if you bought a house that was $100,000, you need 5%. So you need $5,000 of your own dollars. And so a lot of people, when we first start speaking to them, say, okay, I'll go out and borrow them. And that's where the red lights and the red flags come up. That money can be borrowed. However, there's different circumstances. If it is a $100,000 house in Ontario right now, and you want to borrow the 5% down payment, I doubt that any lender will take that deal, because if you have to borrow money on a $100,000 home, which is probably not up to today's standards, they're not going to want to take that risk anyway. But start out with that. The minimum down payment is 5%. And when I say 100,000, it's just strictly an example. 5% of the total purchase price is what's going to be required. And then we'll talk about how and how you can get it, what it means, and all that kind of stuff. And that's what's going to be important to you.
And you know what? That 5% borrow down payment is not on a mobile home or a trailer or anything like that, or on just a piece of property. Those rules are totally different. So let's stick with it. Basically talking about a house in Ontario with people that have a good job, have great credit. Those are the options that are available to them.
But boy, Sandy, you jump right down to the bottom of our dialogue sheet, because it's not all about borrowed down payments. There's a lot of people that are serious about buying a house who've been able to manage to save 5%, because 5% is that number that you want to have and you need to have. So without that, the dialogue is dead. So now I think if we can move on to talking about, okay, so what are some of the options for that 5%? Well, obviously you could have saved it. And if you are saving it, they'll want to see a 90-day savings history. When I say they, I'm talking the lender will want to see a 90-day savings history, so that they assure themselves that it's not borrowed, that it's not laundered, it's not a whole bunch of things. It's real money that has grown over time in your bank account. So one of the ways to get that 5% is to save. Another one is from family. And how do we go about doing that, Sandy?
Well, we have gifted from immediate family members: mom, dad, grandma, grandpa, brother, sister. 5%. And then we do that with a gift letter that shows that they're giving you the money and they're not expecting you to repay it. That's the important part of this. And then to add to that, they want to see that money being deposited into your account from whoever's gifting you that money. So the next option, Reno, is the grant program. You want to talk about that one?
Yeah, and you know what? That's a very, very important program. And I would say that 95% of Ontarians or Canadians have never heard of that grant. They don't know what we're talking about. They think it's some sort of scam. In reality, it's not a scam. What it is it's not funded enough, and it's only available some of the time, but it's definitely not a scam. It's a real thing. And basically, it is a township. Well, actually, there's about 9 or 10 townships in our area that offer that, but most of the time they're out of money. So what it works like is this. Let's take an area just outside of Ottawa. Let's take Prescott Russell, for example. Prescott Russell is a huge county. It has about 10, 15 towns. And if you already live there, if you're already a renter there, and you're buying within Prescott Russell, it is to Prescott Russell's best interest to make you a home owner rather than a renter. A renter could pick up and move to Toronto tomorrow morning, and any benefit that you would have to the community is gone. So by being a homeowner, you become a bigger spender in the community, you pay taxes, you make investments, you improve your home, et cetera, et cetera, et cetera. So there's a lot of reasons why they want you to live in that county. And for that exchange, they have a grant program, which in this particular case, they'll actually provide you the 10% grant, or non-payment loan for now, for the easy purpose, to use as a down payment. And so there's a lot of people getting into homeownership like that.
And talk about the restrictions on that. So the downside to that program is that when you sell, it's not even a downside because it's not your money. So when you sell that house, you got to pay that money back, unless you live there for a very long time, 25 years, Reno?
Well, depending on the county, but 20 to 25 years.
So that's the downside to it. You will have to pay it back if you move prior to, which makes sense. You're making money on a house that you didn't put the down payment on. Your income, and every township has different guidelines. From anywhere from 85 to 90,000 is the maximum family income you can make a year. They also want you to be pre-qualified with a mortgage person like ourselves, and in order to basically apply for that money.
And the other restrictions is, they have, each county is different, of course, but they have maximum amounts of money that you can make. And generally they're $85,000 to $100,000, $85,000 to $100,000 per year for family income. And then you would qualify for that program. If you make 103, or if you, on the low side, if you make 93, then you won't qualify. You're making too much money. So it's to help you buy a home for people who don't have quite the income level that everybody else may or may not have. But basically, it is a grant to assist you in getting into home ownership. And like Sandra said, if you sell it before 25 years is up, there you got to give them their money back. So what? Big deal. By the time 25 years comes around, and by the time 5 years comes around, especially the way rates or house pricing is going, you're going to have so much equity in that house that somebody actually made an investment for you and you profited from it. So the grant is also a great idea. But you know what? Rather than us talk about it, we want your input. We want your questions. We want to be able to directly answer your questions. So we don't want to put your name up on screen. So this is one of the reasons that we're trying to figure out, and this is first episode, so we're going to figure out a lot of things here as we go. But one of the things that we don't want to do is put your name up on screen because of privacy. So we're going to try and eliminate that as much as possible. So if you have questions for us, Rob, if you can put up that screen regarding the emails. One of the things that you can do is send us an email. We will look at our email. We will leave your name off of it, and we will answer the question. And we won't even, that way you get the privacy that you want, but you get the answers that you need. And one of the things I want to caution you on, it seems today in the age of Zoom, text, and Messenger, et cetera, all of us want to get qualified without ever talking to anybody. And I'm going to make two comments. First off, comment number one is there is a mortgage for everybody, but we don't have a crystal ball. So we don't know how to actually get you qualified for a mortgage unless we know everything there is about you, which is step number two. In order to do that, we can't do it all by text. If it was straightforward, we can do it all by text. But like I said, everybody's just a touch different. So a conversation, whether it's by email or telephone, is definitely the way to go. Correct?
Not only that, text can be misunderstood, and it's better for us to clarify for you. So again, if you really have questions and you want answers for, please feel free to email myself at sandbrown@mortgagealliance.com or Reno, if you're more comfortable with a guy, at rviola@mortgagealliance.com. We're more than happy to answer these questions because it's not a one fit for everybody. It's a little bit of something for everybody. And again, we don't have just the grant program. There is the borrowed down payment. Now, every one of these programs we have different guidelines. So you may fit in the 5% down, you may fit in the grant program or the borrowed down payment. It all depends on you. And until we know your whole story, we can't advise you on how to go with that next step.
By the way, obviously we're having a little technical difficulties by not having, you know what, we're learning. We're learning how to Zoom your information meeting and getting graphics and stuff up. So as we go, we're going to learn that, no problem. But for now, look up Sandra Brown or look up Reno Viola, and you'll see it on almost any site. Our names will pop up with Mortgage Alliance. Click on that. That'll take you to our own websites. And on there is an email address, and send us your questions regarding whatever you have via email. That way there we've got some definition. Okay, so now the other thing was about mortgages that you talked about was, yes, that we explained all the programs that there are, but what is required of you? Well, Sandra hit on a big one and then went away from it. In order to get one of those grants, if that's what you're going after, you have to be pre-approved by one of us. And then you go to the township and they'll give you the money. Well, they'll set the money aside based on that pre-approval.
And then once you have an accepted offer, they'll then say, okay, this has been allotted to you. So it's not a one step and you get it done right away. It takes a few steps, and be aware that that grant program is very competitive because there's lots of people that just don't have the down payment but have everything else in scenarios. For example, one of the programs we had, it opened up on a March 1. Within 2 weeks, it was already fully distributed with the funds. So nobody else can take advantage of that program. And then sometimes they reopen it up. So talk to your mortgage people, talk to us. We're here to try and guide you in the best way we can. Right, Reno?
Yeah, that's a great point. So I've done a couple this year. I've done a couple of those. So I got people pre-approved. They went to the township. Our pre-approval was great. They put the money aside, but there's a certain time limit that the township will hold the money. So if you're planning on buying a house in a year from now, it's not the right time to go and put your money aside or ask them to put money aside for you for the grant. They won't do it. 90 days, and depending on some of the counties, between 90 and 120 days is the maximum that they will hold that money for you. So on a 90-day one, and I had a customer go back at day 92, she didn't get the money.
Well, and sometimes, Reno, if somebody comes in with a live deal, they can bump you out of your money, your funding. Because
Right.
they're not going to hold that money for a what if I buy a house day.
Right. So you have to be serious. Again, at the point that we apply for this loan, it's not, you shouldn't be applying to see, oh, if I can get it, then I'll start thinking about buying a house. And but buying a house shouldn't be about that anyway. But as you're buying a house, you're planning on how I'm going to buy this house, and you're taking little steps by talking to a mortgage professional, getting a pre-approval, and having these kind of dialogues. Hey, by the way, your new computer just came in. Isn't that beautiful? So I told you we were learning, didn't I? For God's sake! So
I gotta.
Okay, you go ahead, and I'll continue with it. So, and that is funny because the other phone's ringing off the hook. So they're trying to get into the house and they can't. But so basically, is this buying a house is something that you're planning for? Well, whether it's long term or short term, but it's a plan. It's not as if I can get this, I'm going to go buy a house. That it's not the right way to do it. So these grants are there, and you will get bumped if one day goes by, your deal is dead. So now you find the house on the 91st day, and you go back for your money and say, well, and they'll say, well, you had 90 days. Well, and that's the point. So if it's a plan, you will get that grant. If it's not planned and you're just trying, I hate to say this. Quit wasting your time. Quit wasting everybody's time if you're just playing at it. Because if you're playing at it, let's stop at the step beforehand, before actually applying for that grant. You can stop and start with us. We can get you pre-approved, or we can get you pre-qualified by telling you what you need to know. You don't need to apply for that grant and then never take the money. So I don't mean to sound in a rude way, stop wasting people's time, but if you're going to buy a house, it's a serious plan. And so take it as that. Okay, so now that Sandy's gone to go get her new computer, she's all excited. There's the next question that we always get is, how much house can I afford? Was it your new computer?
It was so timing is everything, and they had to deliver at exactly this time. It is what it is. So you go on, Reno.
Well, we might as well move on to our next topic. And the next topic is always the second most popular question in the world is, how much house can I afford to buy? And you know what? We work Eastern Ontario a lot. And within Eastern Ontario, we work Ottawa a lot. And it breaks my heart that there are some great folks with great jobs, steady, long-term, some of them government jobs, that, makes $50,000, $70,000, $80,000 a year. And those folks, if they're all by themselves, they don't have a second income in that house, are basically locked out of the market. See, Ottawa's gone to the total other end of the spectrum. $450,000 to $550,000 is the average price house. So if you make $50,000 and you're the only income, the maximum house that you can afford is $200,000. So if you're a maximum of $200,000 with great credit, with the right down payment, with everything, okay, you're not going to get a $400,000 home. So the disconnect is right there. And trust me, once you start looking at $400,000 homes, you will never settle on a $200,000 home. It doesn't happen. It won't happen. It's human nature. We've already got our eyes and mind and our beliefs stuck in that $450,000 home. So there's no reason not to try and get it. Well, the reason is not enough income.
And I agree with you to an extent, Rena, but I don't always agree with you. And in this case, sometimes when it talks to income and affording that $400,000, so perhaps if you really want that $400,000, $500,000 house, you need to have a huge down payment. It's not that it can't be done; it just means you need a bigger down payment or more income. And then the other thing that we always get, we get these texts from people saying, "Hey, how much do I qualify for? I do this." They don't, and then we start talking to them and we find out that, wait a second, they've got a spouse, they've got a brother and sister that lives with them, they have children. So that $50,000 income is now for $150,000 family income in that household where they could possibly afford that home. So that's the difference. Again, we talk about that texting and emailing. It's not always cut and dry when you do that. Pick up the phone, call us.
Absolutely. And again, that's that step that's missing for most people. First off, it takes a lot of courage for somebody to get on the phone and talk to somebody like us. That's what we're supposed to do. That's what we're there for. So we're expecting your call. So it shouldn't be a big disconnect. But for you guys, it is a hard thing to do. Pick up the phone and say, hey, listen, I'm not even sure whether I'm ready to buy a house or not, but I want some information. And it can start with that. And we'll answer your questions, no question about it. But Sandra is absolutely 1,000% correct. When you're filling in an application on your own, when someone says HHI, how much is your HHI? Well, I don't even know what that means. But household income is what they're asking about. And so you finally figure it out. It's got to be something to do with income. And you do your salary, which is $60,000. And so you put $60,000 in there and you send it to us. Well, we look at it and say, okay, well, here's a guy that makes $60,000. And you also told us you want to buy a $500,000 house. Well, the reality is that it throws us for a loop. Okay. And when we see that, we say, well, how can I help this guy? So the next thing we do is pick up the phone and call you so we can get a clarification. And generally, Sandy's 1,000% correct. So the gentleman made $60,000. He was filling in the application. His wife made $40,000. She's got a part-time job or whatever it is that she's got. So $40,000. So there's 100. And they got 2 kids. So they get an extra $1,000 a month. There's an extra $12,000 or so as far as a supplement for their child tax benefits. And so they got $112,000. Now, $112,000 will qualify you for a $450,000 to $500,000 house somewhere in there, depending on your debt load. So by having a frank discussion and being open and asking questions of your mortgage broker, that's how you get to buy a house.
And that's what we're here for. We're here to help you plan for maybe not today, maybe in 1 year's time or 6 months' time or 2 years. It's helping you get a plan because unfortunately, this is not something they teach you in school. They don't teach you how to get from point A to point Z and own your own home. It's like you're on your own. So you're not on your own. You have us to at least throw ideas. And I even have some clients that say, hey, I need you to call me once in a while to say, how's your saving coming? Right? So little things like that. We're here to support you to get to your goal. So to get pre-qualified, this is all part of the steps, starting with the very basics about how to build credit. Because what most kids don't know is that you have to have credit cards in order to get a mortgage.
Yeah, absolutely. You need to have some credit cards so they can see how you pay your bills. If they can't see how you pay their bills on a $2,000 credit card, how are they going to possibly take a chance on a $400,000 home? And by the way, I know we don't have time for that topic this week, but when I said 5%, that's a general rule of thumb, and that's the minimum required to get in. But when you're starting to talk houses that are $500,000 and above, there's a different set of numbers that we use for down payment. So it's not 5% in a $500,000 house. Well, and 500 is, but anything over, then you need 10% on the overage. And so we'll talk about that as different topics, but it's not straight cut and dry 5% anymore. And so it's important that we talk and custom deliver a quote of some kind or instructions of some kind so that it makes sense for you.
And also the down payment, it's, again, just like Rena had said, 5% is just, if you were in the perfect world, perfect things, but everything is affected by you. What type of job you do could affect how much down payment you have. Your credit will affect how much down payment you need. All those things can affect it. For the perfect world, we have the perfect credit and the perfect job, 5% is possible. But if you're you're self-employed and stuff like that, it could be 10, 20, 25, 30. It depends on you. And that's the importance of talking to Reno and I.
You know, and again, there's so many little programs that are available to help you buy a house that it's scary. I don't know how you navigate it without being in the industry. So all these programs are made for you, but you're not in the industry, so you never have access to that knowledge unless you talk to one of us. For example, one of the things that the federal government does is in October, they created a matching grant. So if you have 5%, they will also, if you're a first-time buyer and have 5%, they will also match your 5%. So you've got $5,000 down payment on a $100,000 home, they will give you another $5,000. Same kind of thing. It's grant, so there's no monthly payments or anything. But now it allows you to buy, instead of a $100,000 home, it allows you to buy a $105,000 or $110,000 home. So there's a lot of little programs that are working in the background that have to do with down payments that are definitely usable. They're friendly. They're not hard to get. You don't have to, I don't know what the expression would be, but you don't have to work hard at them. Let us do all that work for you because that's what we offer.
And the other thing too, Reno, is many people have two good friends. It's called Google and it's called their friends. They're not always the right answers because things change in year over year for rules and stuff like that with these different programs.
Right.
So please, rather than finding out from somebody stranger or Google, your best thing is to call us to find out whether or not they qualify in those programs. Right, Reno?
Right on. And Sandra, we're done for this week. That's how quick that half hour went by. We've got probably less than a minute now. Folks, there's only, if you're holding yourself back by not contacting one of us, you can get a hold of us at, if you go to our names on the internet and look for our name plus some sort of mortgage reference, click on it, and it'll take you to one of our websites. Our websites have our email addresses, have our telephone numbers. You can text us. You can do whatever it is you want. But if you don't do it, you're going to miss out on some information that could have you into home ownership way before you really would think that you could have it. I mean, I've done people, I've talked to them today, and within 90 days to 120 days, they were in their new home. So it can be that quick if you need it to be. Hey, like I said, we're out of time. Sandy, you got any last thing to say for like 30 seconds?
Hey, if you want to be mortgage ready, give us a call. That's all I can say.
Until next week, folks, remember, every Tuesday, 10 o'clock in the morning, and we will definitely see you then.